Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Neeraj Shah and you're watching IndianOpen. Let's go straight to the headlines at this hour. Oil prices are headed for the sharpest gains in the first quarter in 17 years after Russia affirmed its commitment to maintaining its output cuts. Reserve Bank of India bought $5 billion through a long-term dollar-rupee swap auction to infuse over 34,500 crores into the banking system. The Tata Group, GIC and SSG Capital will invest 8,000 crores in GMR Infrastructure's airport business. And the Mindtree board calls off the share buyback plan proposed before L&T's hostile takeover bid. An independent directors committee will provide their reasoned recommendations on L&T's offer. And Flipkart has set up an $80 to $100 million fund that will invest in early-stage startups working in the field of fintech, payments, and e-commerce. And does that surprise anybody? I guess not. Okay, let's take a look at the trade setup for the day. The S&P 500 had a reasonably okay day. The energy pack essentially led the S&P 500 higher, and that's meant that the index rose about 0.75%. So snapped a 3-day losing streak. It was not a bad day for the US markets. Tempered gains, yes, but not a bad day. I think trade tensions still weigh in. And I think Asia is showing some signs of that because the start in Asia isn't the most spectacular. Nikkei, which has been very, very volatile the last few days, after being down day before and being up yesterday, is down, looking like, or it actually is down about 1% in trade as we speak. Other markets, a mixed trade, and the SGX Nifty showing a start which could be marginally in the red, but no alarm bells. Remember, it's expiry week, so gyrations are set to happen. Crude oil has continued to move up. So US crude rose about 2% in trade yesterday. And as a result of this up move, oil is headed for the best first quarter since 2002. It's not something that's music to the ears for an Indian bull, but you've got to take cognizance of the fact that amidst all the conversations of a growth slowdown, oil continues to move up because of the cuts, and Russia reaffirming its cuts as well, adding fuel to fire. Literally, I might say. So $60 for NYMEX, nearly 70 for Brent, 68 or thereabouts for Brent. So oil is certainly a boogie. Let's see if it has an impact on what happens to the OMCs and some of the oil-related companies, as well as the currency in the session today. By the way, what will have an impact on currency is also RBF buying about $5 billion through the long-term forex swaps, and we'll talk about that as well in a few minutes from now. What about the trade setup? I think the only thing that was worth talking about yesterday, to be honest, was the Nifty Bank, right? Because that was that one index which was the powerhouse and which led the rally yesterday. We thought we'll look at what happened to each of these individual constituents on the price and volume front. Yes, there were long build-up in select stocks, known fact, easy to guess. But look at this. There was price action, but there wasn't volume. The change in volumes, and the volumes were much lower than what the 20-day average volume has been for each of the large banks, even SBI, and all the other private sector banks as well. So volumes were a pale shadow of what usually happens on a 20-day average basis for all of these. So even though there were some higher delivery percentages for select names like HDFC Bank and ICICI Bank, it wasn't quite accompanied by volume. So you can very well safely assume that it was not dramatic FI buying that would have led to this. More future option actions which would have done this. The FI volumes too are 999 crores, weren't exactly out of the world, just about okay and at par with what we've seen in the recent past. But just that point that I wanted to make, that yesterday's up move in the Nifty Bank and the banking names wasn't exactly cash market buying led by flows coming into these banks. It was more trading action that would have happened. Let's see how long does it last. Amidst all of this, the key stocks to monitor in the session today, and I think 3 or 4, this week has been such wherein we don't have too many heavyweight stocks coming out with news, but I've tried to shortlist 3 or 4 which I thought were important. Sheela Foam, and by virtue of the action, nothing new here, but promoters are going to sell about 42 lakh shares or 8.68% of the equity. The floor price has been set at about 1100 per share, so do watch out for that one. Next up, I think Wokhard, Ireland's HPRA and UK's MHRA have carried out joint inspection of the Aurangabad facility. Company says HBR has granted the GMP certificate for the Aurangabad facility for a period of 3 years. Do watch out for Wokard in the session today. Mindtree is an interesting one, and you'll hear from the management a bit later on the platform. They're not going to proceed with the share buyback. They've said that they will constitute a panel on L&T's unsolicited offer. What would all of this mean? Yes, I'm sure you and I both are wondering. The management will explain to us at 9:30 about this piece. So we'll hear from the management on that front a bit later on as well. Make Money Organics. This news was there on select WhatsApp groups in trade yesterday. The company affirming that an accidental fire broke out in the Gujarat plant on March 26. The company is ascertaining the loss of fire, and while they're fully covered for insurance claims, the stock was down 5% yesterday. You don't quite know that is it a matter of just losses happening and insurance covering that, or could there be more to Make Money Organics? What if unforeseen things happen? And that's something that the street seems to be worried about. I mean, investors who are invested in this company have told me that this is the point of worry for them. Maybe the management will speak, and maybe we'll try and get that perspective too if they do speak to us. But watch out for this stock. And last but not the least, GMR Infra will be the other big one that we'll of course talk about a bit in detail as well. But Tata Group, GIC, SSG Capital will invest in the airport business for GMR Infra. Positive news, the stock has run up a bit already in trade yesterday as a result of this development. I would presume select people would have known about it. But what would it mean for GMR Infra? We'll try and do a detailed chat in just moments from now, so do stay tuned for that too. So watch out for these stocks in the session today. The session promises to be a soft one, at least at the start. However, let's tell you what's lined up on First Word today. It's the collection of the top editorial stories that we believe we should bring to you. A scorecard for Nifty and its constituents in the current financial year. We are 2 days away from the year ending. Darshan Mehta has put it together. He will speak about that. GMR's airport business has found new investors in Tata Group, GIC and SSG Capital. Sajid will tell us about the fundraising and what it would mean for the group at large and for the airport business. Agam Vakil will tell us why investors are glued to Pidilite as the stock hits a record high. And then we shift focus to the currency market, where RBI successfully conducted a long-term forex swap auction. Ira Dugal will be joining us with those details. And finally, in commodities, oil is headed for the best quarter in 17 years, but Goldman Sachs' Jeff Currie does not see much more upside. Well, music to the ears for an Indian, I would say. Anyways, let's start off. Three marquee investors, including the Tata Group, GIC and SSG Capital, will invest 8,000 crores to buy stake in GMR's airport business. While 1,000 crores will be pumped into the airport arm, the remaining amount will be spent to acquire stakes held by other GMR subsidiaries. Sajid Mangat joins us for more. Sajid, good morning. One, what is this deal all about? And two, the question that I think at least I would want to know, does this amount in any way help the debt-laden GMR group to reduce the debt burden?
It does, okay, let's put the deal through first. It's a 8,000 crore deal, which values in equity terms would the GMR's airport business at 18,000 crores, excluding the farm outs which are expected, or the additional money which is expected and need to be recovered from all the customers going forward. So that puts the entire value at 22,000 odd crores, which is there. The deal is structured in such a way that three investors, which is Tata Group, GIC and SSG, will be infusing capital into GMR Airports to the tune of 1,000 crores. The remaining 7,000 crores will be used to buy out the shares from the existing promoter, which is GMR Infrastructure, and 5.8% equity, which is held by three private equity, which is Tansy, Macquarie and JM. These three. So ultimately what will happen is GMR Infra will have a 54% stake in the airport, another 4% with the employees. Tata Group will have 20%, GIC around 14.5–15%, and SSG around 10%. That would be the shareholding of it. Now, how does it work for them? The 1,000 crores which will be infused in GMR will be GMR Airports will be used to reduce its debt and also for the ongoing development of the airports. Now, if you look at GMR Airports Developers Limited, which is the whole company which owns Delhi and Hyderabad, and a couple of other operations ones. So, operational one is Goa, which is the new airport brownfield which they are building. Nagpur, they have already got they were the lowest there, and they are yet to get the letter of award, but Nagpur will also go to them, and they are already building operational airport or international airports in Cebu and Crete.
And so also Philippines, but anyway,
Philippines is the Cebu one,
few other ones,
Cebu, and Crete is the Greece one which they are building. So that money will go there as for the equity which they need to put in those airports, and this that should be able to, and further funds can be used as from the debt as and when required. The 7,000 crores which GMR is going to get, that 7,000 crores will be used to reduce its debt. Now, over a period of time, GMR has been reducing, it's a couple of projects, power projects are already in SDR and other, restructuring processes. So, those are expected to also come into, they're supposed to be completed by March 31st, but they haven't happened because of some regulatory approvals. But those are going to happen. That's going to happen. They're trying to sell off some of the road assets, which they have been doing gradually, and finally, the 7,000 will, the existing debt which is there on the balance sheet, they will be able to reduce it by a huge amount. That is the whole plan, or what they've been working with for the last many years. And eventually GMR won't be more known for the airport business rather than the energy and the roads and highways business, which is going to be. So it has been a transition plan for them for many years, with this big investment coming in by Tatas, because Tatas have been trying to get the foothold into airport, and they have not been able to do it. In the last bidding rounds, Adani took all the 7 airports from being the highest bidder. So this is the only way to get into the airport business, and then go along with GMR to bid for many more airports which are coming for bidding by Airport Authority of India. So they will become a big force in that sense, combining with GMR and going for the big airport development business there. So that now that GMR is going to do this, the focus will now shift to GVK as well, because GVK is also trying to monetize this airport business
and actually consolidate their stake in the Bombay business, because they have done.
But they used debt to do it, so they will have to at some point in time deleverage it and bring in some more additional cash so that they can also have that. Because you have the Navi Mumbai airport which is coming for where GVK is there, and it's over 10,000 crores of debt they have tied up for that. So there is a need for a strategic investor to come into the airport business as well.
Yeah, this would be interesting though. GVK, a lot more concentrated airport business compared to GMR, I would reckon.
But GVK exited Bangalore.
Bangalore, yes.
So it has only Bombay and now Navi Mumbai, which is going to be there. So
a lot more concentrated than GMR. But interesting deal, will help GMR in debt reduction as well. Sajid, thanks so much for putting that into perspective.
And we'll have the management as well post 10 o'clock.
Okay, at 10 o'clock or thereabouts.
So we'll get more information on that.
Okay, this is very interesting. We have the Mindtree management at 9:30 or thereabouts. We have the GMR management at about 10 or thereabouts. So a lot of interesting corporate conversations lined up today on Indian Open and later on. So do stay tuned for that. And Sajid, thanks for putting that into perspective. GMR Infra there, very active stock in trade yesterday. Let's see if there is some more activity. Speaking of activity, as we near the end of this financial year, it's time to look at how the markets have fared, what was active, what was inactive. Darshan Mehta is looking at the 50 stock benchmark Nifty and the stocks that have influenced the performance this year. Darshan, needless to say, not the best year for Nifty.
Yeah, it hasn't been, because only a select few stocks have managed to do well. A couple of them have done really badly. So if you're looking at what the kind of market cap addition that was there, at least the slowest in the last 4 to 5 years. So if you have what we've seen is that the market cap increased by almost 2.2 lakh crores over the past 1 year, which is much lower and the highest that we've seen, which is the lowest since which we saw since March 2014. So that's the trend as far as the market is concerned. How did the Nifty perform? Not a bad year as far as the Nifty is concerned. It managed to give a positive return of 14%. The clear star was the Nifty Bank, which is up 23%, but pain continues. The mid cap 100 is down almost 5%, and the small cap index is down almost 16%. So you can see that it was a select few stocks and the heavyweights on the Nifty that managed to aid the Nifty move in much higher. Now, if you take a look at which were the stocks and what actually added them, first of all, look at the counter. The Nifty is up 14%. Bajaj Finance, Reliance, Axis, a lot of banks that you can see, ICICI, Axis, have good weightages on the Nifty and the Bank Nifty, and that is why they managed to move. Kotak was up 28%, but a whole host of stocks, at least in the auto space, the metal space, the consumer-facing names didn't do well. You had Tata Motors, the NBFC space, Indiabulls Housing Finance was down in trade. Z, because of issues of its own. Look at Maruti. Maruti is down almost 26% this year. Eicher, Grasim. So a lot of companies in the commodity business, some of the housing finance companies were down in trade. We'll take a look at the top 3 counters and what aided their growth this time around. The first one obviously was Bajaj Finance. Now it managed to crack almost 33% post the liquidity crisis that happened, which affected most of the stocks. But true to its name and the franchisee, it managed to recover almost 50% from the lows that we saw because of strong growth. So when other companies came out with weak set of numbers, the third quarter was extremely strong for Bajaj Finance and didn't show any kind of stress on the balance sheet, and that is why Bajaj Finance managed to bounce back. If you're looking at what happened, the year-on-year growth, even on the third quarter, if you're looking at it, the total AUM growth was almost 40%, and it has been consistently growing significantly. In the last 3 quarters, performance also indicates that it's gone over the 1 lakh crore mark. So strong performance from Bajaj Finance, negating the worries that was there on the NBFC space. So that was Bajaj Finance for you. The other stock that managed to move up was Reliance. Take a look at the energy business, the retail business, the Jio business. All of them managed to do well individually also over the past 4 quarters. They have managed to come out with strong set of numbers. The commentary strong. Jio is taking significant amount of market share from the other competitors while maintaining the ARPUs. The retail business is doing extremely well for them, and GRMs were strong on the energy business. So the core business is doing well. So Reliance, it was an all-round performance. The third stock that managed to do well is Axis Bank, which managed to gain significantly. Now the real trajectory came in post the change in the top leadership, in which the management started meeting the analysts and started giving a lot of guidance. So they have guided for a 13% ROE improvement for over the next 3 years. So that's something that they see will come in. They expect operating efficiencies and lower credit costs that will come in, that will aid the company going ahead significantly. If you take a look at the numbers over the past few quarters, the stress pool decline with improved asset quality was seen. So the financials are clearly working for Axis Bank at this point of time, and the watch list shows moderation in corporate slippages. So things seems to be working for Axis Bank. So along with ICICI and Axis also seems to be doing extremely well. So these were the 3 stocks that did well, at least for the Nifty.
So this would have been maybe difficult to or easy to do because there were very few which did well. How did you choose the ones which are the worst performing?
Yeah, the 3 worst performers, obviously the worst one was Tata Motors, and the fall mainly came in after the big 27,000 crore loss that they posted in the third quarter. Now, even if you're looking at it, majority of the valuation for Tata Motor comes in because of the JLR. These are the wholesale changes, and if you see what has happened, continuously negative growth that is coming in. You can see month over month. So the last time they had a positive growth was in May 2018, and after that they've just been declining. So that's the first trend that was weak, even despite the numbers. That was it. Financials have been extremely inconsistent. A big 27,000 crore write-off that they did when a few years ago everyone was betting on JLR being the big star when margins were almost 20%. Now margins are sub 10%, and that seems to be the problem. And there are uncertainties over Brexit, how that will pan out in trade. China is already weak for them, so that is the big problem for Tata Motors. The second stock that is having pressure, while Bajaj Finance managed to recover significantly, Indiabulls Housing Finance didn't manage it. So if you're looking at the financials, what's happened over the past 4 quarters, the disbursements have come down from almost 20,000 crores to just 4,000 crores, and the AUM growth has managed to slip down significantly in trade. And the main reason what separates Bajaj Finance to Indiabulls Housing Finance is because of the loans to the developers. The real estate market managed to slow down significantly. So it be it an Indiabulls Housing Finance, or be it an LIC Housing Finance, or be it a Dewan Housing, all of them got impacted. I think the only exception here was HDFC, which continues to grow robustly. So this is the second stock which managed to disappoint this year. And the final stock is Vedanta. Obviously, their core performance was not well because the commodity prices have managed to correct significantly, be it aluminium, copper, zinc, or crude via cane. All of them managed to correct in FY19. The margins have managed to come off significantly for Vedanta. And the other reason why Vedanta did was the big corporate action that they did, which lost them a lot of investor appreciation or investor confidence. They paid 1,400 crores for a parent to for the promoter company to buy a stake in a company in which the promoters own stake. So that was something that didn't go well for Vedanta, and it managed to crack significantly in trade.
Yeah, well, that's an interesting summation. I'm sure all of you know in some details and some memory about what's happened with each of these, but it's great to have a complete perspective of what happened throughout the year for these. Darshan, thanks so much for putting that into perspective. Well, if that was the large cap space and what's done well and what's not, you have to hand it to Pidilite for doing what it has done throughout the year. In fact, throughout its cycle now, the stock hit a life high on Tuesday. The Fevicol maker has outperformed the benchmark Nifty 500 index over the last 12 months very easily. So what's changed for the company? Agam, or has something changed, or is it more of continuation of the same? Agam is here to tell us that. Agam, good morning. Got a strong glue with the gains.
Absolutely. Well, Neeraj, more positives than negatives, but there are some negatives here as we move into heady valuations. But let me start by talking about Pidilite and what's actually worked out. Let's start off with a chart and see how Pidilite has moved in tandem with the Nifty. So we have seen 35% gains for Pidilite through the course of the year, and of course Nifty has moved up by as much as 7%. It's clearly been an outperformer, currently at lifetime highs. Moving on, let's talk about how Pidilite is done. So when I consider the revenues over the course of FY18 through FY15 through 18, we've seen a CAGR of around 8%, but we are expecting an 18% growth in FY19 based on the kind of performance that we've seen for this particular company, and thereby holding on to your EBITDA margins of around 19 to 20%, which many consider as a positive considering your gross margin deterioration. I'm going to talk about that in a little more detail later on, but let's talk about your several other factors as well. Now, this is as far as your volumes growth is concerned. Over the previous, well, about 2 or 3 odd quarters, we've seen volumes come off, but we must remember these volumes are coming off on a considerably high base, and yet the company continues to see a steady, well, double-digit volumes growth coming through, especially when a lot of the other players are struggling to come up with these double-digit numbers. Moving on to your other factors, of course, the large part of this growth is on account of adhesives and sealants, which is clearly driving growth. Of course, 55% of the revenues coming in from there, and construction and paint chemicals form the other large part of its revenue, which is also pushing your sales upwards. But moving on to your other factors, we have seen the vinyl acetate monomer, which is VAM, or one of its crucial inputs, that has come off by as much as 15% from its peak of late, and that can be considered as a positive when it comes to margins, considering this input is one of the most important ones for something like a Pidilite. So analysts see a 5% drop in Pidilite's raw materials costs progressively and gradually. Moving on to your EBITDA margins, the company's been managed to hold on to EBITDA margins despite the fact that there's been so much volatility in a whole host of input costs, and we'll talk about that. But for now, around 18 to 19%, and that of course is also a positive as far as Pidilite is concerned. So these are just some of the factors which are playing in favor of that. Let's not forget their return ratios are very healthy as far as FY18 is concerned. Return on equity at 26% and return on capital employed at 31%. So well above that 25% mark, which is, well, by many considered the crucial cutoff point for investments. Going forward, of course, we see a little bit of temperance here and there, but these are largely what we can expect as we move in. So these are some of the positives that are working out for Pidilite.
What about the challenges?
Absolutely. So I was talking about gross margins, and if you actually consider the way the gross margins are panned out, it's because of volatility of other input costs, which is why we're seeing a decline in gross margins of late. hit, coming down to around 47% from as high as 53.4% a few quarters ago. Moving on, if you leave that aside, we're looking at a lot of mixed cues coming in from markets abroad. So international markets, subdued cues coming in from the US and Brazil units. The growth has only just picked up when it comes to Bangladesh and Thailand, and a drop in operating losses at UAE subsidiaries. That is a positive, but still there's a long way for the company to go in its UAE subsidiary. Besides its geographic reach, we also must remember the valuations at which it is trading at. Now, naturally, it's trading at lifetime highs, so its valuations will be higher than its 5-year average. Currently at 66 times against its 5-year average of 51 times. So that, of course, is can be considered as an overbought or perhaps an expensive stock. Bloomberg 12-month consensus target is 1119, which means a return potential of a negative 9.3%, which could be an impediment for Pidilite in the short term. But for now, it is trading at lifetime highs, and it is clearly in uncharted territory.
Great. Agam, thanks for putting that into perspective. Sure. Clearly one of the big winners in the NSE 500 bucket. Okay. Move on to some larger news. The Reserve Bank of India successfully concluded a long-term forex swap auction yesterday. The big talking point, remember, this was the latest measure by the central bank to inject liquidity into the system. Ida Duggal-Johnson on the phone line with her assessment of how successful was this term and what could we expect going ahead. Ida, what did you make of this action?
Morning, Neeraj. So I think it went as well, or in fact better than what most people would have expected. They got bids of about $16 billion. They accepted the $5 billion that they had targeted. But the fact that there was such large interest at not very deep discounts to market rate shows that this is a measure that the RBI can consider using again. So by swapping these $5 billion, you've injected about 35,000 crore into the Indian system. Now that will take care of most of the concern of the FAG end of the financial year liquidity issues that were likely to crop up. So you're more or less, slightly in the deficit as of yesterday, could turn, marginally surplus maybe, or stay mildly deficit for the year. But I think the takeaway is that you will see the Reserve Bank of India perhaps use this more frequently. OMOs have been very frequent in FY19. A lot of market participants have been concerned that those have distorted bond market rates. So maybe the RBI will now use this a bit more effectively. Quick word on what it means for the spot markets. For the rupee markets, there are two ways to look at it. One is that if forward rates come down, maybe there will be a little bit of buying of dollars, but it's not clear whether that will be very significant in terms of a medium-term outlook for the rupee. From a medium-term perspective, what works more is that if hedging costs have come down because of this, then external commercial borrowings become a little bit more effective. So you could see some of those longer-term flows come into the market. From a bond market perspective, from the shorter-term bonds, this should be positive because it adds liquidity. So you should see commercial paper rates and some of the smaller T-bill rates, etc., come off. From a longer-term perspective, if it is within the markets thinking that OMOs will become less frequent, then maybe it is marginally negative for long-term bonds. But for long-term bonds, the more important news will come today, hopefully, which is the borrowing calendar. We didn't get that yesterday. We are waiting for it today.
Yeah, Ida, just one small follow-up to that. I was reading the note that you've written, and it mentions that the swap auction for the currency market is largely being seen as neutral. I'm just asking a layman question. Dollars getting sucked out, rupee getting into the system, wouldn't it at the margin be slightly negative short term for the rupee?
Yes. Short term, slightly negative for the rupee. That is the broad view in the market. But the reason I'm saying neutral is because that it also encourages the flow of dollars into the Indian market, both by ECBs and FPIs, for whose hedging costs will come down. So it is the immediate term versus a slightly longer-term view on the currency. But the market is divided. Jamal Maklai had spoken to us, and he thought it was negative. Hitendra Dave of HSBC thought it was neutral for the rupee. So it's a debate out there.
Okay, fair call. Well, thanks, Ida, for joining in today and giving us that perspective. Well, a last piece on First Word, and let's shift focus to oil just for a brief bit. Prices are set to post the best quarter in 17 years as production dropped across the globe. Bloomberg's Aaron Clark lists out all the reasons for the sustained rise in crude prices, which could lead it to clock in the best first quarter since 2002.
Oil prices are quite high right now, relatively to where they've been. WTI is up about 32% this year, trading at around $60 a barrel. Brent, the global benchmark, is up about 26% this year so far, trading around $68 a barrel. The main factor for this is really these OPEC cuts that were implemented in January and are scheduled to go through the first half of this year. We've really seen that curb global inventories, it's curbed supply, and that's really sustained, kept prices higher. The other factors, of course, have been disruptions from Venezuela and Iran, but those are the main factors that are driving it forward. I think looking forward, we'll have to see if OPEC continues to implement those cuts. Like I said, they're scheduled to go through the first half of this year, but we'll have to see if they want to continue them or if there's an exit strategy after that.
And Jeff Currie, the commodities head of Goldman Sachs, expects crude prices to stay range-bound through 2019. He pegs the range at $75 to $80 a barrel.
This market today, it's tight. You're drawing inventories at a rate of 1 million barrels per day. The market is backwardated. In fact, that point about the fundamental physical market has to drive the paper market, dated Brent drove paper Brent higher. And you can see it and look at the spreads. We're getting more backwardated. So you have a really tight market today. But as you look out, you have that pipe capacity coming out of the Permian going into 2020, and so the back end is staying anchored. This is an ideal environment for investors, at least for oil.
Great chart that just kind of reminds all of us that the impact that shale has had and how dramatic it's been. So what does this mean for pricing over, I don't know, what kind of visibility do you have?
Well, at least, over the next couple of years where you have a comfort, you're really range bound. The low end, if something bad happens, you go down and probably test 45 to 50. Yeah. You get really tight like we did last year, which you could see again this year, go up in that 75 to 80 range.
I always wonder, Jeff, what that means then for future investments and future production. These guys have to make their investments. They've got to spend their money ahead of time before the payoff. So what does it mean for that? Well,
investment is down. Alex and I were talking before the show here about big oils becoming big energy. Yeah. Because of decarbonization, you're not seeing the investment that you historically would in dirty products, oil included. So as you look out further, let's say 5-6 years, you start to see a shortage due to the investment. But I like to be careful about calling those big structural bull markets. People were talking about it in 1995. It didn't happen until 2004.
So then what's your prediction for the back half? When we have all the Permian coming online and the pipelines picking up, and then OPEC delayed that decision until June, what's your base case?
Our base case is we go back to 60, go up to 70, and then come off.
But does OPEC continue the cuts till 2020? Or
this market will be balanced most likely by the end of April, early May. So they'll have to start talking about exit strategies, and they want to because they want to keep that back end low. They want to have backwardation because it reduces the ability for E&Ps to hedge.
The key, though, to the back half of the year in your call has to do, I'm sure, with what's going to happen with Iran. If you come inside the Bloomberg, it shows exports really diving after those sanctions. We don't know about the waiver situation. How do you factor that into your balance call?
Well, we see Iran coming off about another 300,000 barrels per day. It's running around 1.45. You've lost 200. But let's look at North Korea, Iran, and Venezuela. Which of those three does the current administration have the best chances of forcing a regime change? Venezuela. I think they'll concentrate more of their effort there. Now, the headline reduction in the waivers come this May will likely be much larger because countries like Italy are not using them. Right. And places like Japan are already cutting off their imports of the Iranian oil. So we're comfortable with that 300,000 number. Headline number we may be bigger, but we think the administration is going to focus on Venezuela.
Well, we'll talk about all of this and more a bit later on this is, of course, the end of First Word. But as I said, we'll talk about all of this and more with Andrew Holland of Avendus Capital Alternate Strategies. He joins us at 9:15 to talk about the impact on Indian markets as well. A bit later on, Jasbir Singh, Chairman and CEO of Amber Enterprises, to talk about the third acquisition in 2 years and all that's happening within the cooling solution space. And then Mindtree, which has called off its buyback plan. What's the plan now? CEO Rostow Ravanan will talk about that. But after this break, a full tilt towards the day's trade.
Welcome back. You're watching Indian Open right here on Bloomberg Quint Live. Good morning, viewers.
Morning, Devina. Promises to be a start which is flattish in this session, but interesting F&O expiry set up. And yesterday, the Bank Nifty Big moves there.
Really. I mean, we saw that the day before in the end of trade when the Nifty and the Bank Nifty didn't actually close at the lowest point of the day.
Yeah.
There was a pullback that happened which showed that the bulls were somewhat not ready to give up ground yet. And we saw that big move that came in yesterday. Not a single stock within the Bank Nifty that ended in the red.
But not enough cash market buying. We look in the volumes and the delivery percentages extremely thin. It had to be F&O driven because the cash market on the bank.
We saw that on the turnover numbers as well. We had closer to 11 lakh crores that happened on the NSE F&O turnover versus the cash figures. But let's talk about all of that and more. At this point in time, no major cues coming in there in terms of what the Asian market setup looks like. SGX is pointing towards a slightly more slower start. Mixed bag for Asia. SGX, they're down about 0.2%. But since we're talking about the F&O space and the action there that was primarily led in that segment, Agam Vakil is joining in with the setup. Agam, good morning.
Good morning. Well, rollovers have clearly started to pick up, so we're watching out for those. We did see an advance for the benchmark indices. Rollovers for the Nifty standing at around 43%. For the Nifty banking futures too, the rollovers have picked up currently at around 34%. And look at the April numbers, about a rise around 58%. So once again, it is a bank and the banking index as well as the banks which are leading the gains here. Let's move on and talk about the VIX. It came off to a certain extent, but that's largely because of the fact that we saw advances in the benchmarks. And in terms of the levels, we're seeing writing around the 11,400 and 11,500 puts and unwinding in the 11,600 call, considering we saw the Nifty move higher. And in terms of open interest distribution, currently around 11,400 and 500, that is where we are expecting the Nifty to largely close as far as expiry is concerned. But the Nifty put call ratio on expected lines edging higher to around 1.64. We do have Adani Enterprises, Adani Power and IDBI Bank, which are in the F&O ban, and Jet Airways and Reliance Power as well. Of course, Jet Airways is a new entrant in the F&O ban. And moving on to PNB, that has moved out of the F&O ban. Among other stocks which are also in focus, we have GMR Infra. Of course, we've seen a lot of traction in the big news coming through as well, up as much as 14%. And besides GMR Infra, keeping an eye on Jet Airways as well, continuing to see more longs building into the system. From Jet Airways, Reliance Capital, which is also seeing a lot of traction, up 7.5%. And Arvind is the other gainer, where we saw about 5.5% gains with a lot of accumulation towards the latter series. So we'll be watching out for these names and see whether or not they can hold on to the kind of gains that we saw yesterday.
Right. Agam, thank you so much for that. That's a quick F&O wrap out that we have. It's the expiry week, so a lot more traction is expected. Bringing in Gaurang Shah, Head Investment Strategist at Geojit Financial Services. He's joining us on the show right now. Gaurang, good morning to you. And I want to keep it with the big mover of yesterday, which was the Bank Nifty. You know, all the banking stocks have been moving up in a flurry. And yesterday's session actually saw a comeback of SBI. Up until now, we'd seen a lot of those private sector banks doing what they're doing. And yesterday's session, it was a pleasant surprise to see SBI at the top.
Thank you, Devina, and good morning to all of you all. So the sense is that whatever problems, issues that most of the banks, especially the public sector banks, which had to deal with, inflated gross and net NPA levels, provisionings at a very higher level thanks to those gross and net NPAs, margins shrinking operationally, things looking a little bit shaky. All those have become now thing of the past. Thanks to NCLT and IBC, and now, of course, resolutions like we had for Jet Airways, things have started to look positive, let us face it. And some of the public sector banks, Devina, has shown significant amount of improvement on the earnings front. Whether it is respect to the gross and the net NPAs coming down, and thanks to that, you have provisioning coming back, write-backs, you have the net interest income and margins expanding, you have loan book growth steadily both on the corporate and retail side. My sense, and of course you have a benign, interest rates. Not to forget, Devina, I think 6-8 months back, all of us were talking and worried about how Reserve Bank of India will increase the interest rates. And now we have a scenario because of the domestic data points and most importantly, inflation being within the elbow room of the Reserve Bank of India. We had one cut, possibly in April, first week we have the credit policy, you are likely to see another cut. That's what the expectation is. In that kind of a scenario, my sense is that people would definitely look at banking and financials. Most importantly, private sector banks, because they have been outperforming. And select a few public sector banks, of course, which are on our radar, 2-3 of them, should definitely qualify as a long-term investment idea. And my sense is if economy has to grow, I think banking and finance definitely will have a very vital role to play.
Gaurang, one big piece of news that's happened has come in GMR Infra this morning in the airports business. They have found a new suitor or set of suitors as well. It's effectively it's not an infra company anymore, largely an airport company. What do you make of this development for GMR? Is there money to be made here?
Well, firstly, no specific comments because we don't cover such stocks.
Okay.
GMR, GVK, etc. But Neeraj, if I look at 5 years history, it tells me a lot. And what good is this, couple of 100 crores going to do to a company which has got such a huge debt? Let's face it. And just having, airports in your line of business, I don't think that's going to be something very exciting to me. And not to forget, Neeraj, again, these stocks are very highly overowned, and any uptick of 4, 5, 6%, you see sellers come in wanting to bail themselves out because they have got stuck in these stocks for a very, very long time.
Okay, got that. Though could expect some amount of action on the stock in today's session. We'll talk about many more stocks with Gaurang, but let's pin it down to a few stocks that could react to news today. Our research team is here. We've got Mishika joining us as usual on some stocks and news that we need to watch out for. And what is Goldman Sachs saying about cement as a space? Nikki joins in for that. But let's start off with you, Mishika, first.
Yeah. So the first stock we're looking at is Sheela Foams, their offer for sale. The promoter wants to sell 42.3 lakh shares, which is 8.68%, with an oversubscription option of another 2% stake. The floor price has been set at 1,100 rupees per share, which is at a discount of 15.6% from the current market price. The company can raise a maximum of 573 crore rupees. Then we have Wockhardt. Ireland's HMPRA and UK's MHRA carry out joint inspection of the Aurangabad facility. The company says that HPRA has granted GMP certificate for a period of 3 years till January 2022. Mindtree has decided to not proceed with the share buyback. The company will constitute a panel on L&T's unsolicited offer. Apurva Purohit will lead this panel of independent directors. RBI imposes a 2 crore penalty on Punjab National Bank during assessment of implementation of SWIFT-related operational controls. Meghmami Organics says accidental fire broke in their Gujarat plant on March 26th. The company says it is ascertaining the loss of fire and is fully covered for insurance claim. Allahabad Bank's board approves raising equity of up to 4,000 crore rupees, provided the stake of Government of India remains not less than 52% of the paid-up capital. ICICI Prudential Life Insurance, OFS, gets demand of 6.29 times at an indicative price of 316.11 per share. As per exchanges. The insurance house has also cut down its stake in Jyoti Labs from 5% to 3%. Lastly, let's look at the bulk deals. Morgan Stanley France SAS acquired 3.16 lakh shares, which is 0.68% of PVR at 1,572.9 rupees per share.
All right, Mishika, thanks a lot for that. Nikki, the cement pocket, again a buzz.
So Goldman Sachs has actually retained the neutral rating, but it has suggested that it is surprised by the price hike which has been taken in the month of Feb. However, it's retained neutral stance accounted 3 parameters, seeing a demand which remains to be muted in Q1 of FY21 on account of elections, partial rollback which have been happening over the last 2 weeks, which suggests that eventually the price hike which have been taken in the last 2 to 3 months will even out during the course of the year, and stocks that have captured the upside already. On account of that, there is a neutral rating. Having said that, it had shifted preference to now price beneficiary post the rally, and it remains confident, however, on the demand strength and see cost pressures now behind the industries, prefers ACC over Ultratech on account of the leverage to increase prices and also on account of the attractive valuations, suggest a potential upside of more than 13% for ACC. Ultratech, is downgraded to neutral from buy, and the target price has been revised upward to 4,200 from 4,100, but that still is a potential upside of around 7%. It has maintained the sell rating for Shree Cement, but then hiked the target price. Despite the target price hike, it still indicates a potential downside of around 2 to 3% from the current market price. Back to you.
Right. Thanks a lot for that, guys. So a lot of those stocks that you need to keep an eye out on. Gaurang, just come to you with Jet now, and post the funds of about 1,500 crores initial funds that they're getting. While obviously that takes care of the shorter term for them in terms of the payments that they have to make, they're looking to probably come back to 60-70% of their fleet size, getting active again. What do you believe the next leg of the story is going to look like, and whether or not you start participating in the stock from now on itself?
So, Divya, if I want to buy, why would I buy Jet Airways first of all? Interglobe Aviation is a much better stock. The IPO was at, I think, 1,100 odd rupees. I stand to be corrected when it hit the market. Since then, I don't remember any date of a particular month or a year wherein the stock has been able to go beyond those levels. Most importantly, then you had Etihad coming. I think they bought their stake at about 600 or 700 odd rupees. From that day also, since Etihad bought the stock, I don't remember stock going to 600, 700 and beyond. I stand to be corrected if I'm wrong. What we don't know, Devina, is that whether this 1,500 crores is enough to make things operationally take off at ground level. Point number one. Point number two, I don't know, possibly you can correct me, of the amount of money required to stabilize the company over a longer period of time. We don't know whether lessors have agreed to release the aircraft so that they can operate that supposed to be 75 aircrafts by end of April. Time will tell us. We are not even in April. We are end of March. Most importantly, what analysts like me on the fundamental side would be very eagerly waiting to hear is who's going to be, which is that name which is likely to come and take a larger stake in the company. And there are 4 suitors as we know it as of late last evening. And, with the kind of problems that aviation sector is facing, first of all, Devina, we don't have a specific coverage on Jet Airways, so I won't comment, but I would look at the fundamentals, and fundamentals, as I just elaborated, do not qualify for any kind of a comfort. I think Interglobe Aviation is the much better choice.
No, all points well taken, Gaurang. I think the only consideration for anybody would be what price do they manage to get in the suitor that the SBI chairman was talking about. But I think Gaurang's point is well taken. Fundamentally, maybe Interglobe Aviation remains a far better play, or definitely remains a far better play. Tactically, Gaurang Shah not in favor of playing that tactical move. Fair point. Gaurang, stay on, so much more to talk about. Let's get in our technical experts on board as well. It's a bit later on than we usually do, but get in Gaurav Bissa of LKP Securities to talk about what the derivative space is looking like, as well as Chandan Taparia of Motilal Securities, also has a fairly proficient view here. Gentlemen, both of you, good morning. Thanks for joining in. Chandan, let's start off with you today. How are you approaching trade on expiry week? Couple of days left, and with the Bank Nifty doing what it is doing.
Yeah, very good morning. In this entire series, Nifty has gained by around 6.5% and trading 300 points higher than its volume weighted average. We have seen open interest addition at 11,400, 500 strike in the put side, which is continuously shifting its support. And after the decline of last 3 trading session, market has managed to hold 11,350, 400 zone, and bulls are back on track by knocking the 11,500 zone. Couple of days back, it fell to surpass 11,550 zone on the closing basis, but now it seems that it's all set to head towards that zone. However, the maximum call OI congestion is at 11,500, so that might take a pause at higher zone, but overall trend is positive. And looking at the rollover data, that is near to 47% with roll cost of 0.68%. And after a long time, we are witnessing higher rollover with significant jump in the roll cost, which clearly indicates that longs are carrying to the next series, and because of that, we are heading towards the new lifetime high territory. So as of now, on immediate basis, if Nifty manages to hold up 11,420 zone, we are expecting it to head towards 11,550, 600 zone, while on the positional basis, till it holds above 11,333, we are expecting the rally to extend towards a new high of 11,760, 800 zone on the positional point of view.
Okay, Gaurav, what would your approach to trade be? And again, considering the sharp uptick that we had in the Nifty Bank yesterday, it was largely F&O related because we didn't see too much of activity in the cash side on the banks yesterday.
Good morning. You pitched very correctly, and we have seen a very strong outperformance from Bank Nifty if you compare it with the Nifty index, and we have seen a strong jump coming from levels of 29,150 to almost levels of 29,950. So almost 800 points we have seen jump coming in a matter of 2 days or so. And it has a strong resistance at levels of 30,000, 30,100. This is the level from where the previous downtick was seen. So fresh moves would be seen if it manages to trade above levels of 30,100, in which case we can expect another 300, 400 point up move kind of upside coming in a matter of a day or two. If you look at Nifty index, we have seen a good amount of writing happening in the put side. Yes, the rollovers are good for the reason that there has been strong upside coming in. Good rollovers mean that the long view is being carried over. A good amount of writing is happening, 11,400 put option. The interesting part is that generally people find it quite easy to write call options. Psychologically, it is always easier to write a call option than to write a put option. There are multiple factors for that. And in this particular time, you will see that the highest OI concentration, about 3 million positions, have been seen at levels of 11,500, which is at the money. We have already tested those levels yesterday. And if that is taken out, the next highest concentration is about 2.5 million or something on those levels. If you look at the put side, 11,400 put option is around 3 million positions. 11,200, if I'm not wrong, is also around same tune. So what I'm trying to say is that people are now more comfortable writing put options than writing a call option. This generally means that the trend is up. We may see small bouts of downside, maybe 50, 60, 70 points. But overall, I think we can see a up move towards 11,550, 11,570 by expiry.
Okay, let's talk about individual stocks as well. But before that, let's go on to a special segment, Bloomberg Edge, where Yash Upadhyay tells us about a pattern that the Bloomberg terminal has thrown up on a particular stock. Yash, what's the stock today?
Morning, Devina. So we're tracking Lemon Tree Hotels on the charts, and we're using the proprietary fear and greed indicator, which has given a negative signal on the counter. But as usual, before we start, let's first try and understand what the indicator is and how do you interpret it. So basically, the fear and greed indicator is a spread between the two weighted moving averages of the true range, and it oscillates on a zero basis line. How do you interpret it? You go long when the fear and greed indicator flips its color from red to green, and you go short when it changes its color from green to red. In the case of Lemon Tree Hotels, that is exactly what has happened. 3 out of the last 4 trading sessions, the stock has been falling. Yesterday, it saw a bit of an up move, but even that was not substantiated by enough volumes. And the lower panel over here, that is the fear and greed indicator. After a series of, green upticks, which is a positive value over the value of the zero, that came after the company announced new hotel acquisitions, etc. It had moved up quite a bit, and with yesterday's move again it shows that there could be some fear creeping in as is witnessed on the stock price as well. So if we could get the chart up, I wanted to highlight the fact that 85 is where the stock has seen a bit of a resistance. It touched those levels back in July of last year. With the recent rally that it saw, again it went up to those levels and has corrected quite significantly. The RSI 2 on the daily charts has cooled off quite a bit. It went to as high as 85, and then it has started cooling off again. It's below the mark of 70, which is below the overbought level, but had surged more than 80 at one point in time. So with that, with the confluence of factors, it suggests that there could be some weakness for Lemon Tree Hotels.
Okay, and how well has this worked in the past, Yash?
So Devina, 5 out of the last 8 times that this has actually occurred, the stock has went down by as much as 4% over the next 10 trading sessions.
Okay. Got that. Yash, thanks a lot for that. That's Bloomberg Edge and Lemon Tree that we've discussed. On to some stock-specific recommendations from our technical experts. Gaurav, Bissa, I'll stay with you first.
The first recommendation would be a buy call on Indus Gas Limited. We have seen the stock coming out of the consolidation range. 300 was the immediate hurdle. A lot of writing was seen in 300 call option. Comfortably trading above these levels. On the verge of a good breakout, it can head towards 325, 330. For a day or two, one can keep a stop loss of 305. Target would be 320. A good amount of positions are seen getting built in the next series. The net addition of about 4 lakh positions being added yesterday. Second recommendation would be a buy call on Century Textile on the verge of a recent breakout above levels of 905, 910. Some fresh long positions to tune of 200,000 positions have been added in the next series, the April series yesterday. One can keep a stop loss of 905 on the upside. 930 to 935 is what I expect for today or tomorrow.
Chandan, you've got a buy call on Reliance and an RBL Bank.
Yeah, first talking about Reliance, after the decline of last 3 trading sessions, the stock has managed to hold the support. And interestingly, earlier it was finding hurdle near to 1320 zone a couple of months back. And recently it has taken exactly support at the same zone. So resistance are turning as a support, and this is the critical or classical sign of the leg of the next move in the counter. So expecting the fresh leg of rally in the Reliance industry towards 1420. One can buy with a stop loss of 1340 zone. Second trade, yes, that is the RBL Bank. We have seen the strong consolidation breakout in most of the private bank. Even the Yes Bank is all set to give the fresh move. RBL is also heading to higher zone. We have seen jump in the trading volume, and the stock is forming the bullish candle from last 2 consecutive trading sessions, given the recent highest daily close beyond 650, 650 zone, and near to its new lifetime high territory. So a small follow-up can take it to new high territory. One can buy with a stop loss of 640 for an upside target towards 680, 82 kind of levels.
Okay, so watch out for some of these banking names, and I'm guessing by virtue of these calls, our trading experts believe that it's not just the large Nifty related banks which will move, but some of the small size ones could move as well. You know, the interesting one is Century Textiles, and Gaurav Bissa was speaking about that. Gaurang, did you have a chance to look at the presentation that Century Textiles put up on the exchanges yesterday? Across various businesses, they seem to be fairly optimistic, and some of the related entities that Century Textiles is in, the businesses that it is in, are seeing some traction. Textiles, cement, etc., are all seeing some uptick. Real estate is not seeing some uptick too. Any views on this one?
So again, you know, we don't cover on the fundamental side, but it was long overdue, Neeraj. And every time you talk about stocks like Bombay Diamond, Century Textiles, you always associate the land parcel on the balance sheet and then look at it. But I think this time around, of course, I did not look at the details of the business plan yesterday that was put out. But my sense is that whenever companies do start focusing on strength of various business verticals that they have within the consolidated business, that will definitely open up a lot of opportunity for investors' wealth to grow as well as the balance sheet to improve.
Okay. I just want to talk about another stock which is trading at its 52-week low, and the last 10 days have been particularly damaging for Hero MotoCorp. 10 straight days of losses that the stock has actually seen for a Hero MotoCorp. From its mid-December highs, the stock is actually down 23%. And you can see that last section of the chart will show you the last 10-12 days performance, where each and every single day there has been a blue bar which suggests that the bears were in complete grip of the stock. And the mid-December highs closer to, I think, 3,200, 3,300. From there the stock has moved down quite significantly. Gaurav, Bissa, Hero MotoCorp on the stock. We'll come back to that in just a few moments, actually. Running out of time to pre-open, 23 seconds left to go for market pre-open. So we'll come back and get in Hero MotoCorp's view from Gaurav Bissa. But the Asian market's set up right now. You've got Nikkei 225, that's down about 0.6%. Shanghai is trading in the green, and so is Hang Seng, about 0.5% for both these markets. SGX Nifty, though, still down about 0.1%. That's 11,511 at last count. Pre-open, the Nifty, so we've got 11,477. That's fluctuating a lot, so we'll keep our eyes up mainly on the stocks. Come back to the index at 908. Sensex is up about 1/3%. Coming back to the stock moves, yesterday's session saw NTPC again being one of the top gainers on the Nifty. Whether or not that happens in today's session, have to see. Bharti Infratel actually is now the top gainer, 2.5% higher on the Nifty for Bharti Infratel. BPCL 2%, Z 1.5%, Yes Bank 256 now. Tata Motors moves up. Reliance Industries 1380. Hero MotoCorp takes a breather from the kind of losses that we've seen. The stocks in pre-opens trading higher by about almost 1%. Ultratech Cement, Asian Paints stock is moved up. Kotak Mahindra Bank, that looks stronger. HDFC Bank, that looks strong too, about 1/3% or so. Infosys, ONGC and Asian Paints are some of the other bigger gainers. So majority of the stocks doing well in the green, just a handful of losers. For the currency, 68.98 is where we're trading at.
Just 2 or 3 names. GMR Infra naturally finds a mention. Don't quite know if these gains would hold because it's already had some gains behind it. But for now, looking like it'll start off on a positive note, so 9.77%. Let's see if these rates last. Sheela Foam and the OFS pricing substantially lower than the closing price yesterday. Looking like starting off on a weak footing. Let's see what happens there. Wokhard is the third one, and Mindtree and Make Money Organics, a couple of other names. Wokhard marginally positive, Mindtree no big reaction, and Make Money Organics after the 4.5% downtake, another 1%. Can't not talk about Jet Airways though. Just one last mention of a stock right now. These rates are very volatile, so they'll change. But looks like Jet will only build on from where it left off yesterday and day before. So day before 12%, yesterday a sizable move too, and looks like it'll have another 3-4% start if the pre-open rates are to be believed. Let's give them a chance to settle and then we'll talk more about them. For now, get in Somit Sarkar, who joins in with the top brokerage calls for the morning. Somit, good morning.
Good morning, Neeraj. On the big brokerage calls for the day, first we have is Macquarie on Strides Pharma. Now the brokerage has upgraded the counter to outperform from neutral and has also hiked the target price on Strides Pharma to 532 from 486. Now the brokerage is expecting Strides Pharma's US business to be the key margin driver on the back of market share gains and a strong launch pipeline. It is also expecting the company's EPS to triple in FY20 on the back of improved visibility in the US business, the branded Africa business, and the strong growth seen in other regulated markets. Lastly, it also sees the debt to be lower for Strides Pharma in financial year 2020, and it is expecting the EBITDA to net profit conversion to start improving from FY20 for Strides Pharma. The second note we have is on Gen Irrigation, where Deutsche Bank has maintained its sell rating on the stock but has cut down the target price on Gen Irrigation to 56 from 65 rupees. Now, according to the brokerage, the company has been caught in a debt trap as its elongated working capital and interest payments are eating into its operating cash flows, thereby leaving negligible room for debt repayments. Now, the company's net debt has increased because of its aggressive growth pursuits, that is its acquisitions and elevated capital expenditure levels. Also, its leverage ratio, that is net debt to EBITDA, has increased to nearly 4.1 times according to the brokerage. Lastly, along with this, its core retail micro irrigation business, now that has also been under challenge because of lower cotton prices, lower cotton area and lower subsidy that the government gives to the cotton. Because of all these three reasons, the micro irrigation business has also been under pressure for the company.
Right, Samit, thanks very much for that. So those are those brokerage calls you need to keep an eye out on. I was talking about Hero MotoCorp and Gaurav, Bissa, quickly comment on this one. At a 52-week low now, last 10 straight days of losses for the counter. How would you trade this one? Would you go short on it right now at its 52-week lows?
It has a strong hurdle level of 2600. Give a breakdown below 2550. For me, I would sell only if it trades below level of 2550. I would keep a stop loss of 2600 on the downside. 2480 to 2450 is what I would be looking over.
Okay. Fundamentally, would you be a buyer in a Hero MotoCorp which is trading at these 52-week lows, Gaurang?
So, Neeraj, first of all, we have a positive coverage, blanket disclosure, let me say that, on almost all the automobile manufacturing companies. And what we strongly believe, Neeraj, that this is not a structural slowdown. Let's face it, there are a lot of headwinds from a short to medium term. And not to forget, the biggest hurdle that we'll face over the next little bit of longest time horizon is the migration from BS4 to BS6 straight away, because India is surpassing BS5. All the automobile manufacturing companies have expressed their concern in terms of the fuel availability. Point number. Point number two, election, post-election, I think the demand from rural, semi-rural and certain tier 2, tier 3 cities are likely to be at a lower level. And of course, in terms of the export market too, there are a little bit of concern. So yes, I think it's really, sad to see that stocks like Hero MotoCorp are hitting new 52-week low when the markets are virtually approaching towards its all-time high and ready to cross over that. We believe there is opportunity, let's face it. So Hero MotoCorp, TVS Motors, Bajaj Auto and Eicher Motors, because they have Royal Enfield business in the balance sheet. So that's your two-wheeler pack. In the four-wheeler, Maruti, M&M and Tata Motor. That's going to be the order of preference. Commercial vehicle, Ashok Leyland, and tractor, earth-moving equipment category kind of companies like Escorts Limited. That's going to be the broad universe. But I think the recovery is going to be slow and painful, but it's not like it's not there.
Interesting. Well, let's wait and watch what happens. You know, the dichotomy, and very interestingly, in the two-wheeler space in the last 3 months has been when TVS Motors came out with a strong set of numbers. People said that this is a turnaround quarter for TVS, and now it will really zoom up. I don't think, but that has happened for TVS per se. And people still talk about Hero and Bajaj being the two key players within the two-wheeler space. The other interesting piece that has happened is that Eicher Motors has somehow not quite managed to rev up after correcting quite strongly, and that continues to stay under pressure. But you know, yesterday the move from Page Industries was the very interesting other move, near about 25,000 now, 24,947, for a lot of pain that the stock witnessed, and went down all the way to 21,000 or thereabouts, and people were writing obituaries. It's come back very, very strongly on the price front. The question mark only is, can it do further? I think anybody's guess, but you know, it's Chandan, can you come in on this one? It's not typically a trading stock, but it's had some strong moves in the recent past. Do the charts indicate anything at all?
Yes, you are talking about Eicher Motor?
I'm talking about Page Industries.
Yeah, Page looks quite promising. We have seen the strong momentum on the last trading session. In fact, the stock has negated its formation of lower rise lower lows of last 6 expiries and seen the strong momentum. Technically, it is forming a typical inverse head and shoulder pattern. It has taken support at 50-day exponential moving average, and it is hovering and surpasses multiple hurdle of 25,000, 24,750 zone. So it seems that it's quite promising to head towards 25,500, 25,750 kind of level. And the addition of the long position and consolidation breakout also indicates the up move. So here we have positive recommendation. The stock is negating its lower top, lower bottom, and all set to catch the momentum in line with the market.
Gaurav, the other stock that's bounced back is the big boy Reliance Industries after having a slightly off day before yesterday. In yesterday's session bounced back smartly, today about 1% higher. Can you create a fresh long here for the current series?
Well, if you look at Reliance Industries, it gave a very good pattern. We saw some profit booking coming at the high levels, and it retested the breakout levels of 1330, 1335 and witnessed the upside. I would not buy here just because it's almost at the new high. But any dip towards 1350 is what I would be looking at for. I would keep a stop loss of 1335, 1330. On the upside, 1400 is what I would be looking out for. Here the risk reward is 1:1, not that favorable.
Okay. Reliance Industries though at 1380 odd, you know, has been obviously moving up at a steady pace. But even in yesterday's session though, it was up almost 3%. The focus remained with the financial pocket. So it tends to get overshadowed by bigger moves in other pockets. But the stock itself has been a steady mover, inching up to levels where it is right now, about 1380 odd. Aside from that, an NTPC2 seems to be garnering some amount of interest of late. And the PSU pocket, we've been talking about how the CPSE ETF has been impacting some of these stocks within the PSU basket. But NTPC at 140, you know, obviously Gaurang, this is not a stock that anybody recommends in a big way to have in the portfolio, but just for the fact that it's not fallen too much. You know, what would you do with NTPC and particularly the space as a whole?
So, Devina, you touched upon a very interesting sector just a while back, that is NBFC. And I would like to highlight just one point before I go on to answering your question on NTPC. September, October, November last year were one of the most dreaded months for NBFCs. And correct me if I'm wrong. I think you mentioned Bajaj Finance, and one name I would like to mention, Bajaj Finance. I think the stock corrected on fallback of all those negative news flows to close to about 2100 or 2000. From those levels, in a matter of 6 to 8 months, you are witnessing a level of 2900. You know, you should, what I'm trying to say is to your viewers is identify strong stocks in a weaker sector or a sentiment. I think you tend to create wealth like this. Similarly, yes, you are right. To answer your question now on NTPC, well, since the time it came out from the IPO many years back, it has been languishing for a prolonged period of time. Now, let me give a disclosure. We had a subscribe for the IPO when it hit the market. Post that, we have a standalone fundamental buy report on NTPC, and likewise Tata Power, CSC, power generating companies, including power transmission distribution companies like REC, Power Grid, etc. What excites us is the change in policy by the government in terms of providing power 24/7, power to all, power for all, and affordable power. If I look at the stock, our targets are not really very sky high, but close to about 175 to 185. And NTPC, Devina, happens to be one of the biggest company in terms of capacity of power generation and adding to those capacities every year and a half too. And as we see, the only joker in the pack, Devina, remains is that, unfortunately in India, you have elections 365 days somewhere in the part of the India or somewhere in India every year. And now with general elections approaching, some political parties may use this power and water as tools to attract vote banks in terms of making comments like free power, free, etc., etc. So we like the company, but you need at least longish time horizon on NTPC or any other power generating company.
Well, that's a fair point as well. Gaurang, really appreciate you taking the time out on such a short notice and being with us today. Thanks so much.
Thank you so much.
That's the view from Gaurang Shah of Geojit. 2 minutes away from market open. Let's tell you all that you need to know to stay ahead in trade today. First up, Tata Group, GIC and SSG Capital will invest 8,000 crores to buy stake in GMR's airport business. While 1,000 crores will be pumped into the airport arm, the remaining amount will be spent to acquire stake held by other GMR subsidiaries.
Mindtree has decided not to proceed with its proposed buyback announced a couple of weeks ago. The decision was taken at its board event yesterday.
Promoters of Sheela Foam to sell 8.68% stake via offer for sale. Floor price set at 1,100 rupees per share. That's a 15.6% discount to yesterday's closing price.
Wockhardt Aurangabad facility gets a good manufacturing practice certificate from Ireland and UK drug regulatory authorities.
Lastly, Macquarie upgrades Strides Pharma to outperform, hikes target price to 532 rupees per share. The brokerage expects US to be the key margin driver, aided by market share gains. Well, I must say, just before we get into the top calls, very quickly, Gaurav, Bissa, 30-second. On the charts, do you look at this company called Sheela Foam? It's looking like starting off about 6% lower. If you don't track that, a quick word on GMR Infra.
I don't track Sheela Foam very strongly, but yes, if you ask me the view, it can fall a little bit further. The supports I see around levels of 1235, 1240. I would be a buyer only at those levels. We have seen multiple reversals happening from those levels. So if any dip towards 1245, 1250 comes, that can be bought, have a 30 rupees stop loss on the upside. 1325, 1330 is what I would be looking at.
Okay, top calls from both our technical experts then. I'll start off with you, Chandan.
Yeah, discuss about Reliance Industry and RBL. Reliance has taken support in the previous breakout zone, so expecting a fresh leg of rally towards 1420. One can buy with a stop loss of 1340. Second trade, RBL Bank. Here we are witnessing fresh leg of rally, fresh up move at new lifetime high territory. So the stock is potential to move towards 680, 842 kind of zone.
Chandan, I'm sorry, Gaurav.
For me, this would be Century Textile with the kind of move that we've seen yesterday. Decent data. It can head towards 935, 940 by today or tomorrow.
Okay, Chairman, stay on. We want your opening thoughts post-market open, so just hang on for that because the markets are showing some signs of strength. About 0.5% for the Nifty Bank, above 30,000 now. We were talking about this possibility yesterday itself. It just missed it by a whisker, but in today's session, about 30,034 on open. The Nifty and the Sensex too headed higher as a result of that. Strong start for the Indian equity markets, much unlike what the Asian screen was showing. Mixed bag there, but nothing mixed out here. Very strong start. Let's see if the mid caps and the small caps too are doing well, because yesterday they did bounce back in the second half of trade, and the start is good today as well. So about 0.5% for each of the benchmark indices in the session today. This is not a bad start. Penultimate day to expiry while the world is all over the place. We are actually having a good start. I must say the US markets did give a good handover, so maybe that's aiding too, but it's a very strong start that we're having in our markets. The market red positive. Let's bring up the heat map and show you what's moving and what's not. A sea of green, very little red. That's the order of the day. frankly, nothing too dramatic, save for the fact that need to mark that NTPC seems to be taking a bit of a breather. So down about 1%. We'll actually get a technical view on this one as well. But it's taking a bit of a breather today. And Hero MotoCorp, something that continues to slide. Okay, now very, very flat. But look at the gainers. And there are banks yet again. So Axis, IndusInd, Yes Bank amongst the top movers in the session today. We don't have the larger ones up dramatically, I must add. The HDFC Twins, Kotak Bank as well as SBI are not in the top draw. But nevertheless, banks are having a good start. Z about 1% higher. But it's a clutch of names which are moving up. No clear stock winners, but for banking as a space, which seems to be doing well. Let's wait and watch if this lasts. Very quickly, a couple of trend makers that I do want to point out before I hand it over to Devina for what's happening across the mid-cap end of the market. One, the airport companies on the radar. GMR Infra not having that 9% up move, another 2.5%, but GVK is taking on the rub of green as well, so about 6.5%. Whether they do the same thing or not remains to be seen. But if GMR's airport business has been valued at 18,000 crores, it'll be interesting to see the rub-off effect on GVK. What else? A couple of stocks which are in focus while the large cap banks have done what they have done. What about the mid-sized ones? RBL, IDFC, DCB, and they're starting off on a good note as well. So banks clearly leading the charge. Devina, what else are you spotting?
Well, ICICI Pru, for one, has bounced back in today's session, about 5.5% post the OFS. Dilip Buildcon, the other one, yesterday's session saw a 5% move. Today is starting off another 5% higher. HCC, again from yesterday, carrying forward with gains. Jet Airways, 4%. We spoke about that. United Breweries moves up 3.5%. You've got a Quest Corp that's doing okay. Walker is up to 2.5%. Aarti Industries is the other one that is looking strong in trade today as well. So a lot of moves that are coming in there. The market breadth also looks extremely positive right now. We've got Suzlon Energy that's doing okay. Then you've got the likes of UCO Bank, which has moved up about 5.5% as well. So Above Engineering is up 2%. You've got Kaveri Seeds 1%, Voltas 1%, ITD Cementation that's moved up too. And overall, 865 stocks have advanced on the NSE versus 267 stocks that have looked weak at the start of trade. So I just want to quickly highlight some of the losers. Sheila Foam, like we already highlighted before, is down 5.7%. Arcom is under pressure yet again, so the stock's down 4.5%. Mindtree down 1.7%. Hathway is down 1.7%. Remember, the last 7 days, Hathway has gained about 10%. And Jubilant Life yesterday was one of the bigger gainers in today's session is down. Vodafone Idea, Interglobe Aviation are some of the other losers.
Just mention Sheila Foam very quickly, and let's see what that one is doing in trade. Well, 6% lower, 12.25 and counting, arguably amongst the top losers in the session. Quick opening thoughts from our experts. Chandan, Taparia, either of these names, NTPC, which has taken a bit of a pause today, or ICICI Prudential, which has bounced back quite smartly from yesterday's losses?
Yeah, first talking about ICICI Pru, the stock has seen the strong recovery in last two trading sessions, and it seems that it is all set to head towards the recent swing high of 347, 350. So the strong momentum in last two trading sessions, which surge in the open interest and the volume activity, indicates that upmove could be seen. So here one can continue to be on the long side or can trade on the higher territory. Talking about NTPC, already the stock is making higher tops, higher bottom formation from last 7-8 weeks, and supports are gradually shifting higher. So here the suggestion is those who are holding the position or wants to take the new can continue to be with trailing stop loss of 135, while on upside the stock is potential to head towards 146 to 148 zone.
Okay. Gaurav, Bissa, opening thoughts from you. The Nifty Bank, 227 points higher now. If you were long, would you take some chips off the table, or would you go into the expiry day with this long position intact?
It's always better to book certain profits and take some out of the table. So for me, I would recommend booking partial profits, keep a trailing stop loss, and then one can hold on. If the levels of 30,000, 30,050 are held, we can expect some more upside by today or tomorrow.
All right, we'll leave it at that, gentlemen. Thanks so very much for joining us this morning, Chandan as well as Gaurav Bissa. Moving on, getting in another important market voice, Andrew Holland, CEO at Avendus Capital Alternate Strategies, is joining us on the show. Andrew, good morning to you. I mean, a whole lot has been happening around the globe. We've been seeing the best first quarter for crude in 17 years now. Last time we saw this was in 2002. Aside from that, there has been some pickup that's happening within the US equity markets. Overall, has anything changed since the last time we spoke? You know, obviously, while the view still remains a bit more positive on India.
Yeah, quite a few things have changed. I think the view now, or the concerns now, is the slowdown that we're seeing in some of the numbers, and U.S. housing starts and consumer confidence was pretty dismal yesterday. Is it going to be a recession or not? We think it is. It's just a normal run-of-the-mill recession. No one remembers what they are these days. So, you know, the question is, so you have at the moment this Goldilocks scenario globally where people think growth is okay, but interest rates aren't going higher. So therefore, you know, all asset classes are benefiting from that. But if I'm right, then, and there is a big slowdown, then interest rates globally will have to fall. So if you kind of fast forward 6 months, and this is a scenario we've been talking about for some time now, is that you could have lower interest rates globally, including here in India. And I think the RBI does have the opportunity to reduce interest rates by 50 basis points at the next meeting. You'd have lower commodity prices, including oil and metals. So that's a great backdrop for India in terms of flow of funds from foreign investors. And obviously, if there's a slowdown, then India becomes more defensive as a domestic-driven economy. And a stable government will obviously help people's thoughts towards policies remaining, similar moving forward in terms of reforms. And the capex cycle, particularly on the private side, would pick up in the late second half of this year. And that would help propel both GDP growth as well as earnings. So that's the kind of scenario we're thinking of. So it kind of takes you short term to kind of medium term, but obviously positive. You might have some pullbacks with global market concerns. These are going to be only opportunities to buy, your favorite stocks, going into any kind of fall in markets.
While all these things are well understood, Andrew, does it bother you, the slightest, the pace of which the money has been coming in? And we've already seen the month of March being really big on the FII numbers. The Nifty, Bank Nifty now at 30,000. It's been the last 10 to 15 days on the banks that have seen a big gush of money coming in at a really fast pace. Is there a concern that this money could probably move out at an equally fast pace, or that threat does not really activate right now?
Two parts to that answer. One is, yeah, you're correct. It's been a lot of ETF passive money that's been coming in, and that's going to equally quickly go out. But my scenario is that, depending on what happens with still the US-China trade deal, that could have a fillip for other emerging markets. But, given that we have to wait some time for that, I think, what India's being seen as since the last kind of 2 to 3 weeks is, with the skirmishes with across the border, that kind of helped the BJP and potentially getting a majority, and that's what's playing on investors' minds, both locally and foreign as well. And two, there was a bit of a catch-up anyway. We'd underperformed massively in the first 2 months of the year. I mean, China's still up 20-odd%, so it's not as though we're massively outperforming anything. We're just doing a bit of catch-up. And of course, obviously the banking sector will benefit from not just lower interest rates here, but what's really being seen as probably lower interest rates going forward globally. So that's the backdrop. So I don't see money kind of gushing away again, because I think we'll be seeing on the scenario I gave you more of a defensive growth with a lot of stability, which maybe some of the other emerging markets which perform well at the beginning of the year would be more subject to a risk-off trade rather than a risk-on trade.
Interesting. Andrew, you don't reckon that this is largely ETF money and not India dedicated funds? Because I mean, I don't know what's your experience, but I was speaking to somebody who was saying that India dedicated or long-only funds haven't gotten as much money. This is largely ETF money. Would that change the nature? And part two of my question, therefore, would be, what would you be doing right now? Have you been getting pools of money and have you been investing that money?
Well, two things. One, our funds are more domestic, but we will be launching, offshore very soon. It has been, you're correct, it's been more ETF passive money than it has been active funds. That's for sure. And the active side of it will probably take a little bit longer. I mean, last year was a pretty dismal performance, I think, for most foreign funds in India, not just hit by the markets, but also by the depreciating rupee at the time. So I think, a lot of funds will come back probably after the elections. But I think, as I said, whilst there are concerns that it is more passive money, because of the scenario I just gave you in terms of why I think those monies will continue and will stay with India, we'll probably, I'm less concerned about that. Unless there's obviously something that I missed globally which would, set a global risk off trade, which I'm not seeing at the moment. It's more to do with the fact that, the US, followed by China, followed by Europe very quickly, are all slowing. And that's changed the environment for the interest rate cycle from what it was back in December. So India missed out in the first 2 months of the year because there's a risk on trade. Emerging markets were the beneficiaries and expectations of a US-China trade deal. India didn't perform. India's performed now, but it's still, it's still not one of the best performing markets by a long mile.
Andrew, the other bit would be that I would understand that because of the nature of the money coming in, it's getting marked to index, and therefore this big rally in banks and financials. I would presume that's the reason. But for you who has the choice of putting the money, depending on where you find value or growth, would you be comfortable putting large sums of money into banks and financials now, if you have that time horizon of 3-4 years before you got to withdraw that money? Or do you believe that now the valuations are just a bit too stretched?
No, it's a great question, and it's a very easy answer for me actually, because I'll kind of throw a question back with you, but probably answer it myself for you. But if you think the economy is going to be, it's what, 2.6, 2.7 trillion now. If you think it's going to be 5 trillion in the next 5 years or so, what's for sure is you're going to have a huge banking and financial services sector in India. So, over that period, you're going to see some, huge returns from the banking sector, notwithstanding some of the problems. So the private banks is naturally where you go to, for that kind of growth, expectation of the economy, and the ones who would be able to kind of be nimble-footed enough to get there. Some PSU banks will get there too, there's no doubt, but not all of them. And then selectively, obviously, on housing finance and NBFC. So that's where we are. So our view is that any kind of market setback and any of these companies which get, banks which get hit for any reason is just a good buying opportunity. So both in a short-term view and a long-term view, the banking sector is where you need to be to make good returns over a short and longer-term period.
A follow-up question. Assuming that, wear the hat of an investor who is not wanting the 8, 10, 12% return, but slightly more. Would you believe that the mid-sized banks would give you a better chance of doing that because that's the popular notion? Or would you believe that the large banks, corporate-facing banks, where the valuations are a lot more reasonable, would be better bet? Simply put, the ICICI Access Yes Bank variety or the DCB, Federal Bank, IDFC First Bank kind of variety? What would you prefer?
I like the larger banks because I think they have the balance sheets and where to kind of grow with the economy, if not grow faster in terms of their growth. I mean, you've got legacy problems with a lot of banks, and that they just don't have the balance sheet or the nimbleness to kind of act quickly. whereas the banks you've mentioned, do have that. And the interesting thing is that all the banks that you mentioned by name, in terms of the ICICIs, the Axis, have all got new management. So there's a new kind of, there's a new, kind of sheriff in town who's really kind of changing how those banks are going to move forward, maybe a little bit more aggressive than before, a little bit more kind of regulatory kind of kind of looking at the regulations a little bit more closely for governance. So all of these things I think will play out equally for each of the banks. And I would really go for the large cap banks rather than the mid-tier banks at the moment. You will make money, don't get me wrong, but you just got to be on top of what those banks are doing at the mid and small size or PSU banks, because the management for some of them change quite often, particularly in PSU banks. So you never really get that continuity of strategy because people keep coming in and changing things. So I think the whole banking sector will be good, and I think you can have a basket of large caps with a few dotted mid-cap banks as well, along with NBFCs and housing finance companies. So that's the way I look at the financial services sector. It's going to be huge, and you'll make money across the board, but individually you might do better in one or two than the others. But I think overall, if I want to sleep best at night, then I'd rather keep in the large caps.
So, based on your hypothesis as to why banking is going to be big over the next coming few years, I want to use that same logic and apply it to consumption as a pocket. And, will that too replicate the growth potential of the banking space? I mean, while we know that the valuations are stretched and all, you just need these companies to, in a way, bring earnings performance to match up to valuations. I mean, you will still see a premium, but time and again we've been talking about the earnings potential of these companies, and then at that point you may not actually find them too expensive.
So, the dilemma is this, right? So if you take FMCG companies, I mean, most of them are ranging on, 40, 50 plus PEs, and we all think that's expensive. But the consumption story in India is just not going away from us, and it's a multi-year, multi-decade story which is just not going away. So in that respect, you're always going to have companies in this sector which are going to be highly rated. And actually, if I just take kind of Europe in the kind of 70s, 80s, actually 80s more and into the 90s, the Nestlés and Unilevers of this world, will continue to grow through it, continue to have a PE of 50 and continue to make you a lot of money. So there's going to be times like now when you hear a little bit of slowdown and that. These are great opportunities. You just buy because the longer term prospects are so strong and compelling, and with the level playing field that GST has given these companies, it's going to be, the sales growth is going to remain double digit, but more importantly, your earnings and your margins are going to be, see a very big positive uptick. Now, on discretionary, again, you can pick your pockets in terms of which areas you like, but obviously retail will be huge in the future as well. One area that I am just more negative on, and is because it's to my mind it's a structural sell over the next 6 to 9 months, is the auto sector, because of many different factors, but mainly because of slowing sales growth. Which is leading to higher inventories, which is leading to then more discounts, which is leading to margin pressure. So I feel that the analysts still have to reduce forecast there for me to feel that all the pain that I think is coming for the sector is reflected in both earnings forecasts and therefore share prices. So I think there's another 20% earnings cut for most of the auto companies, including four-wheelers and two-wheelers in this.
Yep, Andrew has been negative on autos in the last time that we spoke to him. Andrew, take a moment to thank you for joining in today and giving us your perspective. Let's hope the markets and Manchester United both have a good time over the next 1.5 odd months.
So do I. Thank you.
I know you do. I'll take a break. On the other side of the break, by the way, the Bank Nifty is still roaring. On the other side of the break, we have a couple of corporate conversations. Amber Enterprises, third acquisition in 2 years. Cooling solution companies looking like having a good time. We speak to the Chairman and CEO Jasbir Singh about both of these. And then Mindtree's called off its buyback plan. What's the plan now? We asked the CEO, Rostow Ravanan, about the same.
Welcome back. This is Indian Open. Well, L&T is inching up closer to acquiring controlling stake in Mindtree. This in turn has prompted the mid-cap IT company to put its share buyback plan on hold. In keeping with regulations, the board has now decided to set up a committee of independent directors to look at L&T's offer. I spoke to Rostow Ravanan, the CEO of Mindtree, to get his take on the entire issue. Listen in.
I think the board considered multiple options. The board had called this meeting to evaluate a buyback because we thought it's good from a shareholder perspective. It's also in line with good practices from the rest of our industry. Like you know, many of our other peer companies have initiated a similar exercise at the moment. So we initiated this exercise keeping all of those perspectives in mind. However, some factors have changed, including the open offer that was announced by L&T last Monday. Keeping some of these changed circumstances in mind, and after receiving advice from experts, the board has decided to call off the buyback plans at the moment.
So the board, Mindtree is in the process of constituting a panel now in regard to addressing L&T's unsolicited offer. So can you tell us a little more about what this panel will do in terms of objectives? What are the main areas that this panel is expected to address?
Under the law, there is a very specific obligation that is levied on the independent directors to form a committee amongst themselves and make a recommendation to shareholders on the offer price that L&T has given in its open offer. So that's the sole objective of this committee, to evaluate all the dimensions of the open offer announced by L&T and make a recommendation to shareholders whether they should accept or not accept this offer. That's the sole purpose of this committee.
All right, sir. So in case the committee finds that there are various factors that may be playing out in favor of L&T coming and taking over, sir, how do you think the board is expected to move going forward then in that case?
The board always deliberates these issues very, very thoughtfully and takes a decision that is considered and keeping in mind the interests of all stakeholders. So therefore, at the time when that decision needs to be taken, it will be taken keeping in mind the interests of all stakeholders. It will be both inappropriate and unfair to make any predictions of how that decision will go. But every single thing our board and the entire leadership team have done from inception of Mindtree has always been keeping all stakeholders in mind.
All right, fair enough, sir. So how do you read the 980 rupees per share that L&T has put forward when it comes to perhaps the open offer as well as what it intends to do in the open market? In your opinion, do you think this is a fair value?
Wouldn't like to comment on it because that's the matter that our independent directors are evaluating it. Until the time they come up with their recommendation, it would again not be fair for me to comment on this there. I have an opinion as an individual, as a shareholder, but it will be inappropriate for me to express that at this stage.
Okay, no problem, Mr. Ravanan. Also, if you could tell me about where your large, shareholders stand. I mean, by that I mean institutions. So, what is their thought process? What do they intend to do at this point in time? From what I understand, to a certain extent, at least some of them have voiced. They have suggested that they would favor Mindtree in this case. But do you think that there are any circumstances out there that may lead them to change their mind? If you could just give me an idea about the larger picture when it comes to your conversations with the larger shareholders.
I think our large shareholders are completely aligned with Mindtree's interest. They are very vocally supporting us because this team, through the strategy and the culture of the company, have delivered exceptional results. To quote one of the shareholders who came out and made a comment to media yesterday. So I think our investors have recognized that the team at Mindtree has created long-term value. They are also very sharp observers of performance. For example, Mindtree has done really well over the last few years and so on and so forth. So I think we are confident that we have the support of our large shareholders in this very interesting times for Mindtree.
All right, sir. Mr. Ravanan, then in that case, of course, culture and compatibility is very important. Going forward, if you could tell us, what are the cultural differences that may stand, in your opinion, with how you're perceiving things as it is between Mindtree and the culture that Larsen & Toubro may bring? What are the concerns here?
I think the concerns are primarily around the fact that Mindtree has a unique culture. It is that culture, along with the vision of the leadership team, has combined together to deliver the results that we have delivered. So our whole argument is, if a certain ecosystem is performing at an optimal level, then don't try and change it. So that's our perspective. There's nothing that we think of or have any comments on other companies' cultures. Everybody is successful in their own way based on their own hypothesis and their own management philosophies, etc. So our whole point is the strategy and culture at Mindtree has delivered great results. So therefore, that should be left undisturbed.
All right, so as far as a final question, as far as the L&T open offer is concerned, I believe it's somewhere around the 2nd or the 3rd week of May. What timelines are you working with respect to the various issues that you guys have placed in store right now, and the way forward perhaps for the founders as well as the panel?
The panel, like I said, the Independent Directors Committee has a very specific objective placed upon them by law to study all the issues and make a considered recommendation to shareholders with respect to the price that the open offer carries from L&T. That's the only objective of that committee. The board as a whole has a lot of other responsibilities in terms of both running the business in a very stakeholder-friendly manner, but also managing the future of Mindtree with minimal risk and with high-performing kind of an orientation. So that's the only thing that we are working on.
All right, Mr. Ravanan, we leave it at that. Thank you so much for talking to us here on Bloomberg Quint, and we wish you the very best for the future. Thank you.
Welcome back to Indian Open. Moving on, the Indian Railways wants to introduce faster trains and more air-conditioned coaches. Amber Enterprises is keen to tap this change, so it made its 3rd acquisition in 2 years. This time, it has bought a refrigeration company that gets 70% of its revenues from Indian Railways and metro coach makers. To tell us more about the deal and the company's strategy going forward, we're now joined by the Chairman and Managing Director, Mr. Jasbir Singh. Mr. Singh, thanks very much for taking out the time. Your 3rd acquisition, obviously, in a space where you've bought the company that has a 50+% market share. Tell us more about this acquisition in terms of the synergies and what exactly it brings on the table for you.
So Sidwal Refrigeration acquisition we believe it's a very positive acquisition. In the space of heating, ventilation, air conditioning space, we are already a dominant leader in the room air conditioner outsourcing space, and we were looking to expand our product portfolio as well as our footprint into the different vertical space of HVAC. And this is the company which is rightly placed in that. It is the leader in Indian railway coach air conditioning manufacturing, metros, buses, and also some part of it is in defense also. It's a very niche segment, very high entry barriers, almost about 5 to 6 years entry barriers to get into Indian railways and metros, because the passenger safety and passenger comfort is concerned. Then one has to lay the whole India service network to deliver the complete services across the train stations. So this company has a complete network already established with them. And the synergies which we are looking into is it helps Amber to expand the products into the heating, ventilation, air conditioning, as well as expand the customers. And there are certain products which this company manufactures which we are hoping to horizontally deploy it in existing customers of Amber, like fan coil units and air handling units and all. So it's going to be a very decent acquisition for Amber and very positive one.
All right. So just, while you've, Mr. Singh, taken on board this acquisition to tap into this market in which, like you said, the entry barriers are big. But how big itself is the market potential in terms of the kind of orders that you could probably receive through this channel?
So right now, if I talk about 6 years back, only 800 coaches were getting air conditioned, and today the number has gone up to 5,000. Because the consumer is able to pay more, and there's a demand of air conditioned coaches. Even in the tier 2, tier 3 and tier 4 cities, people are wanting to travel through air conditioned buses. So there's a lot of demand in this sector, and it's growing exponentially. It's growing at about 10 to 15% every year. And government, Indian Railways has mandated to take this number to 10,000 in next 5 years. So there's definitely going to be a good potential area where this company can expand its footprint.
Okay, just talk a little bit more about, the financials and, once you have Sidwal that gets on board, what would be, the ROC ratios, the EBITDA, incremental EBITDA that comes in for you, and the other aspects with regards to maintenance of margins and things like that?
So this company has a strong ROC of 40+% and 27% ROEs. It has 20+% of EBITDA right now, and almost about 13% of PAT levels. So it is going to be ROC, ROE and EPS accretive for Amber in all the three parameters. On the percentage of margins as going forward, as the railways is bringing up more orders, defense is opening up. There is a set of clause now, so it has taken this company almost 7 years to get into defense. Now that is also opening up. So as the loading of the plant will come up, the margins are going to expand. And then there is a common buying which happens between Amber and this company. So we believe that Amber's buying leverage power will also be, expanding the margins in this company.
Talk a little bit more about the working capital intensity for Sidwal, and once it comes on board, how does that change?
So working capital intensities right now are close to about 180 days in this company, but whereas we think that we will be able to bring it down to close to 100, in the range of 100 to 120 in next 2 to 3 years time, because we believe that there's certainly some things to be done on the on the inventory levels as well as on the creditor sides. And also there's a retention clause in Indian Railways and metros which the company has to abide by, which is 5% or 10%, which they get after the coach, after the air conditioner is fitted in the coach. But due to the margins are high, so they don't take any working capital limits from the bank. So it's a debt-free, almost working capital-free company as far as the banking limits are concerned.
Okay. How do you intend to pay for this, sir?
So we will be funding it through internal accrual as well as partly by debt.
Okay, got that. Any further plans? I mean, obviously, this is your third acquisition that you've taken. You're broadening your reach into various different segments. Anything else that's on the plate that you're considering right now?
No, I think Amber has been growing by product expansion strategy, then technology expansion, customer expansion, and geography expansion. So we will keep on looking on for inorganic growth, but as such, right now we don't have anything core on the table. Whenever it comes, definitely we'll inform the markets accordingly.
Okay, just one last question, Mr. Singh, on this particular topic is by when does the numbers start reflecting on your books?
So we are likely to close this transaction by around 30th of April. I think Q1 results will have a consolidated number for this company as well.
Okay, got that. Mr. Singh, we leave it at that. Thank you so very much for joining in. So Q1 is when you'll actually see the numbers kick in, and according to Edelweiss, this particular deal post-consolidation will see a jump of about 12 to 15% in the EPS in FY20. They've got a price target of 1100 on Amber Enterprises. Remember, that's a steep target on the upside. 782 is where Amber Enterprises is currently trading at.
Well, the markets are trading very well, though. We may be off the highs of the day, but still doing okay. By the way, just want to mark what the bond yields are up to as well. There's been a bit of a drop. Remember, the largest forex swap auction, and just a mild bit of a pullback in the yields. The currency has been static as well, so no big reaction. None was anticipated, but just marking that point that we aren't seeing any dramatic reactions into the bond yields or the money markets as a result of the forex swap auction done yesterday. It's a wrap on this leg of Indian Open from Devina and me and the entire team that put this show together. Thank you so much for watching. But stay tuned. A lot of interesting conversations, including the one with GMR, coming up on the FNO show. So stay tuned to Bloomberg Quint Live.